As we get ready to close out the year, gold is heading for its biggest gain in nearly 14 years, driven by U.S. rate cuts, geopolitical risks, and a wave of central bank purchases. While the commodity has inched lower since the U.S. election, its gains this year still make it a top-performing sector in the metals sector. What will the 25 look like? Let's bring in John Ing. He's an expert in the sector. He's also president and chief executive officer of Maison Canada. John, first of all, thanks for joining us on the final day of the year, and best wishes to you in 2025. If we look at a longer-term run of the gold price, the price really began rallying in September of 2023 and has continued through that period of time, adding about $800 US to the price. What triggered the rally, John? What woke people up to the attractiveness of gold?
Well, as you know, Paul, gold has been a relic of the past, and for decades it has done nothing. And in the last year, it is now, as you mentioned, has been the top performer. And really, there's two reasons. One, it's a strategic asset. We saw China, for example, has been a long-time buyer, and is just in the last few years has tripled its holdings. The Americans are the largest holders of gold. So from a strategic standpoint, from a stockpile standpoint, gold, countries want gold. The second most important thing is the financial asset. It is a storehouse of value. And as you mentioned earlier, there's just a lot of geopolitical problems. There's wars on 3 continents. There's Mr. Trump. There's a lot of uncertainty for investors. So gold stocks were really had been pummeled, and now they have become richly not valued, but very much in demand. So I think the gold price will, in fact, go higher.
What's the connection, John, between geopolitical risks, situations like the war in Ukraine, the war in Gaza, and the price of gold? What specifically is the psychology of investors? Do they believe that those geopolitical tensions will hurt stock markets and that gold is therefore a safe haven?
Well, as we see, investors just do not like uncertainty. And we find in the Middle East, for example, on how that potentially could spread. In the Ukraine, Russia, will they just stop at the Ukrainian border? We don't know. Gold in historic times has been the currency. Wars have been paid for by gold. In fact, Russia has paid for their war armaments partly with gold. There's been huge gold demand. So there's a geopolitical undertone to the rising gold price.
What about gold stocks, John? How have they rallied in comparison to the price? And do you see value in gold stocks right now?
Well, that's a very good question, Paul. The problem with gold stocks is for a long time, they had a lot of debt. They fixed the debt problems. For some, they did some takeovers, M&A action. Newmont was a good example, except Newmont stubbed their toes. Bigger was not best. They have now, and they're paying for it, a very high operating cost. They have they're taking big write-downs. And so gold stocks have really not participated with the gold price. The other reason is costs are very high. I can recall when costs were maybe $200 an ounce, and then it went to $800 an ounce. Now we're talking about all-in cost of $1,200 to $1,300 an ounce. So with the gold price today, they can make money, particularly the Canadian producers. But my expectation is a much higher gold price, and there is just a shortage of gold mines. Gold in the ground has become much more richly valued, now trading around $600-700 market cap per ounce. And that makes it very attractive for other gold miners to gobble up the smaller gold miners. That's why I see a lot of M&A activity. It's sort of like a game of musical chairs, and there's just so few chairs around. It takes 10 years to build a gold mine, or up to 10 years, and we just haven't found any major discoveries. All the low-hanging fruit has been plucked.
We ran an interesting piece from Bloomberg News earlier in our program, which highlighted the fact, and I'm sure you're aware of this, that in China, many wealthy families and individuals are heavily invested in gold, but they're not interested in securitized gold or shares of gold miners. They want physical bars of gold, and they hold them in their own safe deposit boxes. How common is that type of gold ownership in this part of the world?
Well, in Asia has always been the largest buyer, led by India, for example, where gold is used in dowry. For China has historically been a big buyer of gold, again, for security reasons, for jewelry reasons. I can recall they, rather than 1 ounce of gold, they have something called a tael, T-A-E-L, and like a gold slipper, and like little small mini bars of gold, and they exchange them during holidays. They gift it during special occasions. So there's affinity to gold. But most importantly is gold, China is the largest consumer of gold. They have the largest physical gold exchange in the world. In the last, I think they set it up about 10, 12 years ago, and now is the biggest player. They do not like necessarily derivatives. As a large producer of gold, they are for the fourth largest, third largest producer of gold, yet they are still searching for more gold mines, and that's why I see them being big buyers also.
John Eng, President and Chief Executive Officer of Maison Placement Canada. Thanks a great deal for your insight, John, today and early.